I got to tell you, when the Mavericks won, Sandy Pianalto, who's head of the Federal Reserve Bank of Cleveland, gave me the biggest hug. In fact, the only hug she's ever given me. I'm so grateful when we beat LeBron James. The Federal Reserve Bank of Atlanta serves as the clearing point for all the electronic checks. Now, a very important part of what we do is we provide liquidity to the depository institutions through what we call our discount window. That's our lending operation. In other words, we are the ultimate banker's bank. Those of you in the room that are affiliated with depository institutions, whether you are members of the Federal Reserve System or supervised and regulated by somebody else, are certainly aware of this vital function. Lending programs that make up our discount window help relieve the liquidity strains, just day-to-day operating strains or overnight needs, by providing a source of short-term funding. Fully secured, fully collateralized, we've never lost a dime on our lending activity. And this goes on uninterrupted every single day, every single night. In 2009, just to illustrate how the strains in the financial system have changed, we at the Dallas Fed, for our institutions in our district, made 594 loans, which approximated $30 billion. That average overnight outstandings of about $9 billion. In 2010, we made 156 loans for about $3 billion, so 1/10 the amount. And I chair our credit committee. I personally review the loans made every evening. I'm an old banker, and I enjoy it. That's how I get my kicks. Not a very exciting social life, but that's what I do. Very importantly, I have noticed this year almost no activity in our deposit window. Usually when banks are being examined by the FDIC or others, they'll have them take out a test loan. But the other night I approved a loan for $10,000. Last night I approved an agricultural loan for just $100,000 overnight to a bank. So that activity has, for all practical purposes, disappeared. Not just in my district, but throughout the system. Among our other responsibilities is supervising the banking industry within our district. We conduct on-site interviews of our state-chartered member banks and bank holding companies and monitor bank performance and stability using electronic surveillance technologies. We supervise from the Dallas Fed 38 state member banks, 523 bank holding companies, and because of the outcome of the Dodd-Frank bill recently passed by the United States Congress, we now have the responsibility for 24 more thrift holding companies in our district, and the Federal Reserve will be supervising all the bank thrift companies. I should tell you that originally the intention of Dodd-Frank was to remove the Federal Reserve from supervising all depository institutions except for those that were too big to fail. And I will give full credit to an old friend of mine, Pike, named Kay Bailey Hutchison, who turned that entire bill around. She deserves a good handshake from y'all or a pat on the back, depending on which way she's facing. Because she stood up to what would have been a very poor outcome and would have directed monetary policy to just dealing with the large institution of 50 billion or larger, and it would have, in my opinion, distorted the way we make monetary policy and would have removed the community and regional banks from our supervisory powers. And she got 96 votes in the United States Senate, much to Senator Dodd's chagrin. That supervisory role that I mentioned is very, very important. I began my career, as you mentioned, at Brown Brothers Harriman. Most people in this room don't realize that is the oldest private bank in America. It was founded in 1818. It is to this day one of, if not the most profitable banks in America. And as a plebe, as I like to say from my Naval Academy days at Brown Brothers Harriman, I had beaten into me a basic principle, which every banker in this room knows, which is why our bankers in Texas do well, which is know your customer. So if we're going to be lending money, as well collateralized as it is, we need to know our customers, and the best way to know our customers, whether we are supervising them or not, when we lend them money, is to have that supervisory and regulatory responsibility for the institutions I mentioned. And that helps us not only in lending money, but in the formulation of policy, which I'll turn to in just a minute. I want to mention that the Dallas Fed also organizes programs designed to raise economic and financial literacy in our state, in our community, in our district. We host a lot of public events, a lot of conferences. We have one of the most successful publications in the Federal Reserve System called Building Wealth. It's a bilingual interactive program that helps school children. It's actually approved for the Texas School District and one other state to understand what money is, what interest rates are, what compound interest is. And in the old days, of course, what a checking account was and what electronic payments are. This is an issue where we spend an enormous amount of time, and I just want to intercede here with one point. One of our major interests at the Dallas Fed now is trying to figure out what we can do in our state and in our district, and particularly here in Texas, to improve the status of Hispanic education. 38% of our population is Hispanic. Most in Texas, unlike any other state, most which are Mexican heritage are born Texans as United States citizens. In other words, I'm the child of immigrants. They are just as American as I am. But unfortunately, they're not doing well in school. Let me give you some statistics. Let me first tell you what they do economically. They earn 36% less in hourly wages. Their median household income is 60% of non-Hispanic families here in Texas. And as we like to say at the Dallas Fed, and we like to preach, you earn what you learn. 1/2 of Texas's school children are Hispanic. Only 38% graduate from high school. Of those with a high school degree, only 43% go to college. And 23% of the natives that are native-born Texas Latinos, aged 25 to 64, are high school dropouts. Only 14% of Texas Hispanics in that age cohort have college degrees. This will be the majority of Texas. And we are devoted at the Federal Reserve Bank of Dallas in our job of promoting literacy and understanding and being an agent for economic improvement to making sure that our Hispanic community does as well as the non-Hispanic community does here in Texas. So currency processing, bank supervision, lending as a banker's bank, public education efforts are the integral parts of what we do. Having said that, you wouldn't know it if you read the papers. That's not the part of central banking that attracts attention. And the sexier bits of what I do, if you could describe anything that a central bank does as sexy, deals with monetary policy. So let me talk about that and let me explain how that works. I said there were 12 banks. The presidents of the 12 Federal Reserve banks, in addition to the governors of the Federal Reserve Board, right now we have 5, that's 2 shy of normal. So the 17 of us normally meet every 6 weeks to discuss the current trajectory of the economy and craft the appropriate policy response. We do so in what's called the Federal Open Market Committee, referred to as the FOMC. It's in these meetings that we set the base rate for lending, known as the Fed funds rate, and where we develop other monetary policy initiatives like all the programs that we put in place to restore liquidity during the great financial crisis of 2008 and 2009, and the commercial paper markets and mortgage markets and the other interbank lending markets in that crisis. I come to each open market committee armed with input from a research team that provides intellectual heft for informed monetary policy making, as well as insights from my board of directors, which are 4 boards, 9 citizens picked from each community from across the state in the case of the Mama board in Dallas, and the San Antonio board, and the El Paso board, and the Houston board. And then our advisory committees, we have an agriculture and small business advisory committee, and we have a small depository institution advisory committee that includes the thrifts. And we have these wonderful economists and analysts who study the local, national, international economies. Few of you may know that one of our affiliates is a man named Finn Kidlin, who won the Nobel Economics Prize in 2004. He's been working with us for over 20 years.